capacities, licensed financial advisors, registered investment advisors, or registered broker-dealers. Nothing contained in this webinar, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment security or transaction. Trading options involve risk. Visit the OCC website, www.optionsclearing.com, to read characteristics and risks of standardized options. PSW provides educational and training services that are meant to teach you the risks and potential rewards of trading options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. As always, do not trade with money that you can't afford to lose. Past performance does not equal future results, and results discussed in this webinar are not typical and are only valid on the specific or identified date. Your results may vary. By accessing this webinar, you agree to hold yourself harmless from any losses you may incur as a result of information discussed in the media identified above. By accessing this webinar, you will be placed on our mailing list and you will receive our newsletter. Rest assured, we take your privacy very seriously and we will not distribute or sell your information to anyone. All right, fantastic. Got that done. Now it's time to share the screen. Let's see. Share my screen. Have I done everything correctly? Yes, I have. Okay, good. Yes, I mean you can too. That's what that's all about. Let's see. Let's get that chat box back up. Here we go. All right, fantastic. But see, it says right there, don't gamble with your investments. What screen is this? Right to the main window. What's that one? That's the webinar screen. That's Yahoo. All right, so here we are today. And so far, if we look at our chart over here, oil went down, I missed that one. So far, we are not being driven to new highs. We had a bit of a sell-off here. So the Dow's down a bit. The S&P's coming back slightly. NASDAQ's up 0.5 point, and the Russell is flattish. Oh, wait, those are not. Shoot. Okay, that one wasn't right. I knew it wasn't over to 2070 because we shorted it. All right, that's where we are. The dollar, as you can see, was down, and it was knocked down nicely from 98.63 to 98.83, so right about 1%. We were knocked down there, and that helped keep everything boosted for a while, but then it fell off the cliff anyway. What it's really doing is covering all the selling that's going on. Gold had a nice little pop here. Silver had a nice pop back to 16. We like that long at 15.95, and it's now up a nickel. TLT fading out there. And we got natural gas, who cares? Brent crude is down 1%. See, Brent crude is down 1%, but our oil is only down, well, here's CLK. That's the old contract. And, well, actually, you know what? I think I have that up on this screen. Let me go back to the active screen. Here we go. On my active screen, I was watching CLK to see if it dropped, and then playing CLM. And up so far today, we're up about just under $10,000 because we took the short up here at 58, of course, which is the same short we take every day. It's not complicated. So we took the short at 58, and we got a ride of about 50 cents down. I missed this one because I was setting up for the seminar. I was going to short when we failed 50. I was going to demonstrate that we should short around 57.50 because it was getting weak, and boom, it unfortunately fell all the way to 57 already. So I'm not happy about that because that would have been a nice chunk of change. But what the hell? All right, so we'll see if we have any other opportunities. What do I want to talk about today? I didn't really want to do the futures today. It's kind of not that interesting other than oil because we still, you know, with an hour into the close, I'm still expecting a nice capitulation move here on this oil. On the, those are the May contracts that are about to roll over. These are the June contracts that are the current contracts. These are CLM, they don't show the M, but these are CLM5s. And these are rolling into these. And the goal, as I've been saying all week, when these things, the spread was $1.50 between the two, and now it's down to just about $1. And that's how they try to make their roll. So what they're trying to do now is drive these contracts down while keeping these up to narrow that spread so that these guys can escape without spending too much money for their rolls. So unfortunately, sometimes you have to cut these things to the wire, but that's what, we had a little bit yesterday. We had a nice capitulation move in the morning, made some money. Then we got back in yesterday, made a little bit of money here. We had a $500 move here we caught. And then this morning we got another $500 move. So that's good, right? And in this case, I did 20. So we had $2,500 moves is $10,000 bucks. I mean, that's the way you want to play it. You don't really want to play 20, by the way, unless you have a lot of money. But 20, because you can lose 10,000 just as fast. But I was very confident because of all the stuff we keep talking about on how oil is manipulated and how the timing towards this time of the month is very much in your favor. So I was just waiting for a nice big move, and unfortunately I got out a bit early. Yeah, it was me. Now, I was playing the S&P, but I was only playing like 2 contracts for a little bit, so we caught a little 350 move on the S&P. But then I lost interest when it got down here. It's just, well, I wasn't looking for a major move on the S&P, but oil, I had conviction. And it's very different when you have conviction on a trade because you can play it differently. So let's see what's interesting. I know there's a lot of news with oh, that's what we should do, is talk about the news, because frankly, there are a couple of things in the news that I would want to play off of, and we just did the news recently. Oh, and somebody just asked me something in chat that I said we talked about in the webinar. Oh, somebody asked about Facebook. I'm not liking Facebook. Just as far as making a call on it, because it's not cheap, unless I'm wrong. I think Twitter I was liking more than Facebook. It's not particularly cheap. It's way up in the channel. It's above the 50-day, above the 200-day, of course. It's probably strong. It's probably going to do okay, but it's not the kind of thing I really want to play on. Now, Twitter, on the other hand, has been hugging the $50 line, TWTR. Oh, nice. That was TWTR. Twitter has been hugging the $50 line, and it's just started to break over it. The rising 50-day moving average is going to give it a little kick when it touches it, so that's good. That's a positive sign. The 200 is just starting to bend up to follow the rest. And Twitter, it just seems to me that they're doing quite well, and they are only just beginning really to monetize their revenue, their streams. I find one big thing they're doing, they're pushing promotions a lot. Like they're really trying to get you to pay them money to promote your tweets and so on and so forth. And I guess that's effective. So we'll see how that does for them also in their revenue. But Twitter, if you look at the grand scheme of things, it's not much higher than it was like back when they IPO'd out here. That's their IPO. Oh, no, I'm sorry, that's not their IPO. This is their IPO at 40. So they're only up 25% in 2 years from where they IPO'd. I mean, not counting the fact that the initial price was down there, but the real price was 40 on that day. They held it. They went up. They went down. They went up. So it's a solid $50 stock. And you can play it because they're so volatile. Here's an interesting way you can play Twitter. So TWTR. You have to want to own them. All right. Oh, I'm sorry. We should check the earnings date. Okay, earnings are on the 28th. So like next week. What's today? The 22nd, 21st. Wait. Yeah, 21st. So a week from today is earnings. All right, so we'll take a look at that, and we'll see what the May option pricings are. See, and you can sell the May 50 puts for $233. So that right there I find interesting. And then the question is, against what? If you really don't mind owning them for $50, what you could do is you can buy this bear spread, and that's the $4 here, the 45.38 bear put spread. So you have 190 here, and you have $4 here. So let's call that 210. So you're buying this bear spread for 210, and that is just to be clear, that's the January 45 puts, and you're selling the 38 puts for 210. Then you sell the May 50 puts for 235-ish, right? So you're actually getting a little net credit of 25 cents. Now, why are you doing this? You're doing this because if your worst case scenario is you're going to own Twitter at $50 plus less the value of your bear put spread. Your bear put spread could be up to $7. But you're going to own Twitter at 50 because it will be assigned to you if it goes down, less the value of the bear put spread. That's what happens if Twitter misses. If Twitter hits, you have a free bear put spread. So that's only one part of the trade. All right? The other part of the trade is to take a bull call spread on Twitter. And here, since it's at 51, you try to sell as much premium as you can. So we'll sell like these 55. Now, sell the 50 calls. See, these are $8. So you can sell these January 50 calls for $8. And you can buy the $45 calls here, January 17. That's not bullish enough. I think I want to be more bullish than that. Well, let's see how it works out. These are $14, or yeah, these are $14 for the 45, and then you can sell the 60s for $7.80. All right, that's almost $8. So you're talking about a $6.20 spread there. All right, so you're getting $6.20. You understand? So you're taking the 45.60 spread. All right, for $7.20, 45.60 for $7.20, and then you're going to sell. Well, you don't have to sell that, and since it's only $7.20 for that spread, how about we sell the June 52.50s for $3? All right. So what do you have there? Then you have. So then you have a free. It's going to be Twitter, and that's going to be the January dollar. What did we say? Let's see if I remember. It was the January. Damn it. 50.40. What was it? 50.43. I totally forgot now. Anyone remember? To figure out what the bear put spread was. Too many different things before I wrote something down. 45.38. Thanks so much. So you get the January 45.38. 45. You probably can't see this, so I'm writing it down. 45.38 bear spread. It's hard to type on this thing. Bear spread at. And what did we decide that was going to be? That was going to be 220, right? Or 210. 210 at 2.10. Sell the May. And what do we say? The 50 puts for 235. So May 50. Whoops. 50 puts for 2.35 and buy. Then you're going to buy the 2017 45.60 bull spread for Let's see, what did we say that was going to be? That's going to be 1390 and 780. So 1390, 780 is 610, right? Yeah, 610. 610, sell, that's less than I thought. 13, am I correct? 1390 minus 780. Yeah, that's 610. That's cheaper than I thought. So that means we can be a little more aggressive with our sale. So then we could sell let's say the 5250s. Now, well, let's not do May though. Let's do June and get more money. Yeah, that's nice. And let's sell the May 5250s. Nope, June, silly. June 5250s for, how much for this? $325. Okay, enter. Uh-oh. That print? Oh, it did print. Okay. I was like, damn, way to go. All right. So, you've got your bear put spread for 210. That's going to protect you from a downturn down the road. The May 50 puts you're selling for 235, and you're also selling the 5250s for 325. So this is kind of like a quick version of our butterfly plays. You're selling 560 worth of premium in May ahead of earnings, in May and June ahead of earnings, sorry. And you're buying for 210 plus 610, you're buying for 820 long-term positions, right? You're buying 2 long-term spreads for 810. So what's going to happen? It means that if put goes up, as long as it doesn't go up $10 in one shot, you're going to be in very good shape because you're $5 in the money, and your net on this, your net layout on this thing is 8 minus 4 something. It's like 4. Your net layout is $4. So anything up under 60 is a profit. Okay, now what's probably going to happen is Twitter will go up 5%, 10%, whatever, and then you're going to roll the short puts and you're going to sell, and you roll the short calls, you're going to sell some more puts because those puts will expire worthless, and you're going to be in a very nice, profitable play. Okay, it's a great way to play earnings, and it's great with a volatile stock like Twitter when you don't expect it to make a major move. And why don't we expect it to make a major move? Well, it doesn't make major moves too often. Look what it does. It goes up, then it goes back down, then it goes down and back up and down, but it's generally pretty good in this channel. We think the channel is going to rise, but even if it rises, it'll probably stay between 50 and 60 bucks. It'll probably be somewhere in that range. I'm targeting 55 really for the next place it settles down. All right, so I think that's a really nice little earnings play to go on, and we'll see how that works out after earnings, which will be next week's seminar, in fact. We'll know, or maybe actually the next day, because I think they're at night. All right, so next question, or first question, because I haven't answered it yet. Chrissy says, how do you buy the 1017 bull call spread on Taser? Selling the 17 call when Taser's at 20. What? No, Chrissy, that was if you, Chrissy's talking about something from chat. All right. She means, let's see. Okay, Snow asked a question, I answered Snow, and then I said, see where it says submitted on 710? Okay, that's an old trade. We were just discussing, as part of this discussion, I was mentioning that, they're up from where in July, where I was calling for buy, because back in July, over here, I was talking about Taser like every day when it was down here. I was saying, this is our stock of the decade, and people were giving it to you for 10 bucks and 12 bucks or whatever. And I was banging the table on it. And here was an example of a trade that we actually added. It was, to the long-term portfolio on 710. So when Taser was dropping like this, what do? Because we're not technical analysts, we're fundamental buyers of stocks. So when a stock we like goes on sale, we buy the stock. That's what happened on 710. All right, so Chrissy, that's why we put that up. You can't buy it for that price now. Nobody can buy it for that price now. We bought it for that price now because we were on top of it when it was cheap. Because we buy things when they go on sale, not after they've gone up. Okay, and you see, like, the people in our chat room, we talk about stocks that go on sale. We don't, I mean, some people ask me about the stocks that go up also, but we care about a stock when it goes on sale. We dumped Taser here. We sold it as part of our overall dumping of the long-term portfolio. We got rid of it, but that trade was so far on the money, we almost got our full payment for it. So that's a fantastic one there. Okay, and then there's me, and Chrissy says she missed that. That's right, you did. And Mike says, tons of fun earnings tonight. Oof. Oh, God, CMG, that'll be interesting. I wouldn't bet on it. It's too scary. Yahoo will be interesting. Wouldn't want to bet on it. Yum. You got your currency issues with Yum. I got to think they're going to be hit pretty hard on currency. But so far, people are getting a pass on that. There's Broadcom, who I love. ISRG, I love too. How's ISRG doing lately? I haven't looked at them in ages. ISRG is an old favorite of ours, but they kind of got expensive and we lost interest. That's another one. When they go on sale, we buy them. There's a list of stocks that we buy whenever they go on sale, aside from our buy list. And, yeah, so here, they were cheap, and then they went up to, I mean, when they go from, when something goes from 340 to to over 500 and gains 50% in less than a year, we lose interest. It's done. We got the ride. Let's move on and find another cheap stock, right? That's how we like to do it. Cheap stock. That's right. See, now I'm back on track. All right, so where were we? I was talking about news items. Cheap stock number one, Lumber Liquidators, right? We were just talking about this one in chat. We pushed our position in the long-term portfolio. Let's see, in long-term portfolio, let's see, my portfolios. And that is the $25,000 portfolio, which is now the $33,000 portfolio, long-term. Ooh, so close to 50%. All right. Our current Lumber Liquidated position is, before we did that trade, we already added more long calls. We added 10 long calls here. Our existing position was 5 of the 2017 30s, another bull call spread. We did the 30-55 bull call spread, and I guess it was on 3-2. I don't know. We added pretty soon after that. So I don't know what the original price was for the bull call spread, but we originally took up the bull call spread when Lumber Liquidators was really getting hammered. And where'd they go? Oh, right. So when Lumber again, it's I think actually it's interesting because you see there's a pattern to how we buy things. Because what happened here is the same thing that happened with Taser. When Taser dropped, we got interested, right? And here, it's not a year later, so it doesn't seem that impressive to you chart people. But we don't care. We're value buyers. So when Taser got really cheap, we bought it, even though the chart was ugly. Lumber Liquidators has an ugly-looking chart, but we value the stock. And I talked about this before, of course. And here we had an opportunity when it collapsed to add it to our long-term portfolio. In fact, I know what happened. That was here when it first collapsed on March 2nd. We jumped in and bought some. We were too early, so then on March 12th, we didn't get out of the stock. We bought more. That's how we got into that Lumber Liquidators trade. Right, 20.35 for 5. Thank you. Thanks, Pat. I appreciate it. So we originally took the 20.35 spread for 5 here. Then when it dropped, we added more. Oh wait, Oh, well, I'm confused because for now, for whatever reason, we have the 30s. But what we did here is we added more because it got cheaper. We didn't get out of the trade because it got cheaper. We added more. Of course, we looked to see what the news really was and what was going on. But we don't think this problem's going to last that they're having. Oh, don't tell me oil's moving down. Now I just got out of 20 of those. It's pissing me off. Oh, man. I'm going to cry. All right. By the way, you see how scattered this is? Look at these. This is how a normal futures contract looks. You got bids, you have ask, and you have people buying and selling in between. Look at this contract. This contract is falling apart. That's why it's dropping so fast. They've got 1 hour left to trade, and they've got there's no buyer. you see how these things are they're so spaced apart. There's hardly anybody bidding for anything. It's a total mess. And here, this is a really weird situation. This has been happening all night. Here's the last sale. Here's the bids. Here's the ask. But they're fake. You see how they move together, but no sale. This button shows a sale. If a sale is actually made, watch over here. See, if a sale is actually made, this button moves. Here, these guys, the bids and asks are moving up and down together. No sale is being made. And you know why? Fake, 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 fake. This is just the computer trying to draw in somebody to buy at this price. Nobody's making an offer, so they just keep moving the needle up and down, trying to get someone to pay higher than $55.75. It's not working. It's very interesting. So you can see how messed up this is. It's completely fake. The bid ask is fake in this particular case. They still could have a pretty big collapse into the close because I'm sure people have to get out of these contracts, so I'm kind of tempted to get back in. I can't. It's so hard because I don't want to get back in after I just got out at 57.50, and now it's freaking below 57. It's going to make me cry. It's going to go. If it goes down to here, I'm literally going to cry because I did. I had 20. I had 20 of these suckers, and I got out of them here when I was getting ready for the webinar, and I was going to show you guys how to get back in. And while I was doing it, it went down. All right. Anyway, frustration. I get more frustrated about not making 10,000 than I do about losing 10,000 because it just annoys me. Yes, tissues for me, thanks. Losing 10,000 is like, okay, I'll fix that. You know, like not making 10,000 is like, that's gone. You can't make it now. Where are we? But there will be another day. Not for a month, but there'll be another day. All right, where are we? Now the dentist threw me off with his oil moving down. What the hell was I talking about? All right. Oh, I know where we were. Lumber liquidity. So, opportunity. All right. So, this is me banging the table. Lumber liquidators, as I've been doing 4 months now. There's nothing actually wrong with the business. They're not poisoning people. No one is dying of radon in the wood. And even the tests that were run, it was just a hatchet job done by people trying to short the stock. There's nothing real about their problems. They may have gotten a bad batch of wood. They may have a supplier that wasn't keeping it up to code. They may have to reinstall a few people's floors. But this is what they do for a living. You know what it's like? It's like a carpet guy. Think about it. I mean, this is the problem because you say lumber liquidators. A lot of people, because you don't have wooden floors, you think, oh, that's a big deal. It's not. It's not any different than if your carpet guy screws up the carpet and has to come home. What is he going to have to do? He has to come back to your house. He has to pick up your furniture, take your carpet out, and put new carpet back in that fixes it. That's all. It's just wood, okay? And the radon isn't like flying out of the wood. You have to crack the wood open and then dissolve it in a solution and test it to find the radon. It's like it's in there, but it's not like leaking out or anything like that. So it's just silly. The radon is silent. It's one of those things. Anyway, so it's something you shouldn't have in your wood. Anyhow, so that is not a big deal, and I strongly believe that they will come back up. And now there are analysts who are starting to agree with me finally. So when the analysts start jumping on board, you're going to lose your window of opportunity, and all you're going to be able to do is what Chrissy did and say, how come I can't get that for $10 anymore? It's like, well, because it was $10 when we loved it a year ago. It's not $10 anymore. And these guys, when they're back at 50, I'll be saying, well, you know, I could not possibly have told you more times that this was a good stock. I mean, that's how they work. Same thing with Encana. Now, Encana, you can still catch. Last week, what was that? Like, hang on, Friday. All right. It's not really getting away yet. Friday, it was 1307. And I said, we were talking about whether we were talking about whether CHK was a good play. Oh, I know what we were talking about. We were talking about whether BDC asked, Biodiesel Chrissy asked if there was another way to play UNG because it decays as an ETF to play natural gas for long other than UNG, which is an ETF that decays. And I said, we used to like CHK, Chesapeake, but Chesapeake spun off a lot of their assets and we don't like them as much anymore because we're not sure we don't know what assets they still own and what they don't, and we're not comfortable with the mix right now. Encana, though, lovely company. All right, very good gas play. They've been languishing, and I would have added this to the long-term portfolio, but we already have too many materials plays, so I'm not looking for any new ones. But this is a great play. So we were talking about owning them because they do not premium and dividend, but they pay a 28-cent dividend, and you can sell the 2013. I'm sorry, you can buy the stock, sell the calls for $3.20. 2017, 13 calls, still it was only $13.54. And I'm sure the calls are more money too, though, so it still works out. And sell the $15 puts, which are high. Notice I don't have a high target here, because I'm selling puts that are higher than we are now. For $4, for net $677, $10.38, and your worst case is 20% off on 2x, blah, blah, blah. This is a fantastic stock, fantastic play, and if you need something in the energy space, it's a great thing to stick in your portfolio. Now, it was the 13 calls and the 15 puts. So let's see how that works out to you now. You know, I just want to stress today that this is how we buy things. We're value buyers. We're not in a hurry. We're not looking for something that's going to move tomorrow. It's fine. If they happen to move, that's great. So now it's $13.40. You sell the 13 calls for, you're not going to get $250. Well, maybe you will. The last person got $250. All right, so let's say you sell the 13 calls for $250. So now we're at, so it's 13.4 minus 2.5 minus, and then we still aggressively sell these puts. Oh, that's a shame. Look, see, they were so high. All right, so 295 is 3. Let's call this 335. Or let's say 330. All right, so then minus 330. Not as good as it was before, but it's okay. 3.3. And now you're netting 760. All right, so you're netting 760 on this trade to get into Encana. If you get assigned at, wait a minute, what was my original sale? Was it the 15s? Yeah, 15 puts. Okay, so you're buying one round for 760. If you get assigned, then you're going to spend $15 more, and your average is going to be $11.30. So your worst case here is you average $11.30. The original trade was, at the time, $6.77, so it was only really 60 cents cheap. No, there is, oh, and actually it's a lot cheaper. Damn, wait a minute. Well, I lost track now, but I think it was $7.60, right? So it was actually $1 cheaper. So already in 1 week it's up $1. In a few days it's up $1. And but the high part, the $11.30, isn't so bad. And you know why? Because it's only half of the difference. So it's only 50 cents worse. No, I'm sorry. I'm wrong. It's $1 worse. It is $1 worse either way. So you're spending $1. So you're actually spending $1 more per share. So this thing is up 20. More than 20% here, and 10% here. That makes sense. Okay. So it's not as good as it was, but it's still a good trade. I mean, there's nothing wrong with that. You're going to get $7 and you're going to get called away at 13. That's not a bad trade. But again, these are fundamentals. It's cheap. It's a good value stock. It doesn't matter what the economy does. It doesn't matter. I mean, it matters obviously a bit, but it's not like you don't want to hold this stock long term. That's a very, very big difference from others. And Mike, I assume you're asking about Bank of America, right? There's no stock BAM that I know of, is there? I don't think so. So See, I'm old. Oh, there's a band. It's Brookfield. Is that what you're talking about, Brookfield? Oh, yeah, you are talking about Brookfield, because sorry, read the rest of your question now. Some people started calling Bank of America BAM, and it actually annoys me. I still call them BAC, because I don't give a crap if they bought Merrill. Anyway, so they're selling off on equity, and they own 3 partnerships, and blah, blah, blah. What do we think of Brookfield? I couldn't tell you because I'd have to look into the sale, frankly. I mean, it's if you remind me in chat, I'm happy to check it out. It depends. You know, when you start saying they're selling off on an equity offering and they own 3 partnerships and they're doing this and doing that, I mean, that's an investigation. Somebody doesn't like it. All right, how much are they diluting themselves? And what compromises have they made to make this offering, and what have they spun out? It's all a lot of stuff. Okay, if you ask me about BAC, I like that. It's a lot easier question. All right, James Coe says about lumber liquidators, 60 minutes may really hurt sales. Yeah, it may hurt sales for a quarter, but again, you have to understand our long-term philosophy. We're not buying something for a quarter. So I don't care if somebody has a bad quarter. That's when I want to buy them. Okay, it's like you can't wait till somebody has a good quarter to buy them. You're never going to get a good price. Oh, look at oil dropping. I'm so mad. Oh, formaldehyde. Thank you, Mike. I was like blanking on what it was. Like it was so many, because in New Jersey it's all about radon. Yeah, it's found in all sorts of things. Anyway, so it's found in wood and in Lumber Liquidators case. And so 60 Minutes had this big expose saying how awful it was. And we talked about this in another seminar, I remember now, at the time. And it's just like BP. In fact, today BP is in the news because they might get bought. You know, they're fending off a hostile takeover. These guys were in the dumper a few years ago. All right, you can't do worse than that. The Lumber Liquidators didn't destroy the Gulf of Mexico. They didn't cause billions of dollars of property damage. All they did is buy some wood that may have it may have a tiny bit more formaldehyde than is acceptable under California guidelines, which are the strictest guidelines in the country. All right. So Chrissy says, this is what confuses me. When you sell a put so far above the present price, first of all, we almost never do that. But in that particular case, we're selling a put above the price because we really want to own the stock. And when we're selling the put, and you're referring to, of course, this one in Kana, we're selling the $15 put for $4. What we're doing is we're saying I'm willing to buy the stock for what? Net $11. There's nothing weird about that. The fact that I'm selling a higher put, I'm getting more money for it. So my net is still $11. I'm just setting a target because I strongly believe the stock will be higher than 15. So why should I sell a $12 put for $2 or whatever? All right, in fact, let's take a look on Encana. So, yeah, well, 13. Why would I sell the $13 put for $2 net 11? Follow this, okay? It's the same $11. Well, not now, I'm sorry, because of this. It's maybe 50 cents more. So now, not when I did it, because when we did it, we had a better price. So now it's $11.50, let's say, you would net on this. So if I can net $11 by selling the $13 puts, but I net $11.50 selling the $15 puts, I'm only taking a 50-cent risk. But my upside at 15, my upside is now $3.50 instead of $2. So for 50-cent risk, I get $1.50 more reward if it works out. My downside risk is only that I end up owning the stock for $11.50 when I was going to own it for $11. It makes no difference to me. I really want to own it. And that's, again, all you guys with the selling puts, you act like it's some horrible thing. I want to buy Encana. I'm very happy to have Encana in my portfolio. This is just a way to say I'm offering $11.50 for it. Does anyone want to take it? Your mouse is making everything wonky on the screen. That's interesting. I hadn't seen that happen before, but whatever. All right, Mike says, Brookfield, we know that now. And Juno, what do we say about Juno? That was an interesting move today. They had a study from the Children's Hospital, complete remission, 20 kids. Wow, very nice. Really? Does anyone compete with that? That sounds fantastic. Would you go long CLM now after the CLK expiration? No. I'm not long on oil. I'm not short on oil. I'm not nothing on oil right now. Although if it keeps selling off, I might consider it. Damn, where are we? Oh, I'm so angry. All right. So, would I go long? No, I would not go long because I think that oil could easily go lower. It's been jacked up and jacked up and jacked up for this. Oh, and by the way, see how this gap is closing? They're really trying to make these rolls for $1. All these guys are trying to get out. They're doing whatever they can to roll these contracts over to here. So no, at the moment, in absence of news, I'm not long or short on oil. I'm just kind of watching it. I think on the whole, the pressure is still to the downside a bit. There's a very, very heavy amount of contracts in June. There's 430,000 contracts as of this morning, and there are still 35,000 contracts left in May. So figure probably there'll be 450, 460,000 contracts tomorrow in June. And our storage is full. There's no room to deliver these things. Oh, you don't break down there. Come on, now I'm going to get rid. Let's just mean now. I'm going to be so angry. I'm so tempted to just sell some now, but it's a stupid move. I'm just doing it. I would just be doing it out of anger because I missed the drop. So where were we? Yeah, so there's so many contracts in June, they can't possibly be delivered. It's completely fake because there's just no room for. How could they deliver 450 million more barrels? That's almost all the barrels we actually have in storage or on order. And we have way too many barrels on storage. I think there's 480 million barrels in commercial storage. And usually this time of year, there's 400 million. And this says 80 million over the normal storage amounts. And again, the NYMEX thing is a complete scam. I wrote about that this morning. It's a complete and utter scam. It's meaningless nonsense. But unfortunately, that's how we price oil in the United States. But there's no way they want those delivered. And because of that, even with the summer driving season and even with the economy recovering a bit, they just got too many open orders. And they have too many open orders because of exactly what's going on right now. They had too many in March, April, May, and they keep rolling their problem along in anticipation of a demand that's never going to come back. Okay, people have changed their habits. People don't take pleasure drives anymore so much. People do not go on driving vacations as much as they used to go on them. Cars get better mileage, okay? Companies conserve energy. In fact, it's funny, I go into a lot of offices these days, and you see these meters. They're laptop screens or on TV screens, LCDs, that they tell you how much energy the building is using. And they're all very proud of themselves. All these green buildings everywhere that have solar roofs and things like that. And they show you how they're using like no energy or low energy or whatever. That's all bad. It's not, obviously that oil, they're not being heated by oil generally or run by oil. But if oil's not being used if natural gas isn't being used or coal isn't being used to make energy in a building, then that's going to create less use for energy in general, and that hurts oil. And John says CL only closed 18.8. Yeah, I think at the last minute you're going to see a nice spike down in this thing. I can't see how they're going to avoid it. I think we're going to see 55 again, maybe lower than 55. But like I said, see, that's the thing. See the support line here? This is not a good place to trade it. But we know, in fact, what were our lines? Our lines were 57.75, 57.20 was our next line of support from the 5% rule. So 57.20 is right there. See how, and you see how that works. See how it fell? It held 57.20, which we were complaining about this morning, And yes, we're actually up at this time talking about it. So it's holding 57.20 this morning. We figured we'd get another crack at 57.75. We went short at 57.75, made some nice money, but I was waiting for 57.20 to break, and now it finally broke. But unfortunately, I missed it because I was talking to you guys. But anyway, so I missed it, and now we got to break down to the next support. What's the next support? 57.20 is 55 cents more below. So 57.20 minus 55, I guarantee it's exactly where this line is. That would be 70.45, right? No. 20 minus 55 is 70, and then 45. Oh, no, 65, silly. Yeah, 65, and there it is, right there. Look at that. That line, that green line right there, is the exact line the 5% rule predicted last week. That's how good it is. All right, so Robert says sell spec. No. You can't sell. Look, we don't have a good reason. I mean, it's very dangerous now. Just because we have these fantastic calls on oil, just because it perfectly followed the 5% rule for the last week, the reason it does that is because there's a predictable pattern because of the pressure today to get rid of the rest of their contracts. But overall, it's very dangerous because we're not at 57.50 anymore. Now we've relieved pressure. We're down at the we're down at the strong retrace line at this point. So it's not a safe bet to say that oil is going to go down or oil is going to go up. This was easy money. When it was at 58, when it's at 57.50, that's easy money for us to say we're going to short here. That was an obvious play because we knew exactly where it was supposed to be. Once it goes here, it becomes more dangerous at 57.20, which is why we stopped out. And then here, once it breaks 57.20, then it was easy to say we'd get another 50 cents down. But now here, we expect to bounce. And if you want to get nitpicky about it, though, you can chart this because now we've got 57.50 to 56.65 is whatever, it's $1.10. So your bounces off $1.10 are going to be 22 cents, and then they're going to be 44 cents. So 22 cents from 65 is how much? Is 87, which is you see how well the 5% rule works because there's your bounce. It's exactly what it's supposed to be. It's supposed to be like 87, right here, 87. And the next bounce after that will be 22 cents higher than that, so it'll be 09. So right about here. So if it breaks over 57.10, that's bullish. But if it bounces to 57.10, starts coming back down, that's when you can bet it back down. But that's really nitpicky day trading stuff that I frankly don't like to play with. I like to take the macro moves. I like to take 20 contracts and short them and then ride it down. I didn't take 20 at once. I scaled into 20 and I scaled out of 20. But, you know, I like to take the contracts and short them and then get out and then be done. I'm like, I had my 50-cent move and I'm happy. Well, let's take that back. I would have been happy if it didn't then drop another 50 cents. I'd be so much happier if I caught the whole dollar, but I didn't. All right, anyway. So a failure at 87 is a weak bounce failure, and that means that you've got a good likelihood that the next one's going to break. So, all right, I tell you what, let's play it. So let's say that we're looking for failure at 87 right now because of the pressure here, and we really don't think they're going to recover. Who said that about the contracts? John, how up to date are you watching that? Is that like are you up to the minute on those? Let me know. All right, so here's 85. Let's take that for one short, if I can. There, that's filled. All right, so now I'm in at 85. I'm going to get out if it's over 87, and I'm marking here. Let's mark 75 here also. So we want to see that at 75. So I'm going to get out over 87. If these guys are over 75 too. But what I'm expecting is these guys to break sharply lower and to get followed by the newer contracts. So let's see what happens. Oh, and what we should do now, if we're going to be playing this, is we should be watching the dollar. Okay, thanks, John. I appreciate it. So 19, now you're saying 19.1. So we're watching these contracts bleed out at a rate of not fast enough because they've only got 35 minutes, so 40 minutes to trade. So we're watching these contracts bleed out. Oh, look at that. So you made 400 bucks. Pretty good, huh? No, I didn't make how could I make 400 bucks? Oh, I sold 5 at a time. Oh, shoot. Hang on. That was not my intention. I was set for 5 because when I was buying back my 20, I had 5s. Wow. All right. I'm like, how the hell did I make $400? All right. And that is how you make $400. Anyway. I gotta let him pull that off with more aplomb because I could have be like, hey, that's how we can make 400 bucks. All right, so now we're not getting the bounce. I'm out now, unfortunately. I would like to get back in at 80 or 82. Here we go. Thank you. I'll take that. So now I'm in at 81, and if it goes back up to 87, I'm happy to take another one now, when my average will be like 84 or something like that. But what we're expecting, remember, we're expecting him not to go over 75. We're expecting this one to fail at 65 at some point. Whoa, that was fun. And that's how you make 50 bucks. All right. Chrissy said, what's the better energy play in Kana or Noble? And Kana is the answer to that one. John says that. We know about that. Chrissy says, how do you get NSE on TOS? I don't know what NSE is, Chrissy. Oh, New York Stock. You don't, unfortunately. There is no New York Stock Exchange. Oh, I like Total. Yeah, Mike's right. Total's good if you just go for anything. But I'm talking about, we were talking about natural gas plays, and I don't really consider Total a natural gas play. Chevron's a natural gas play. They got a lot of it. BHI we like because they're getting bought by Halliburton. That one's, we're in that one. Rig we like also. So he's got a good list. MLPs are always good too. I'm not sure about those guys. I just don't know them that well. They pay huge interest rates is what's good about them. So where were we? Look at that, $100 more. Fantastic. Yep, here's the test. But now you see we're testing it with velocity. See, now it's testing with volume and velocity. So we should break down here, and here we go, breaking down. Perfect. These guys are breaking down like we thought they would. And we'll see what we end up getting out of this close. So now I'm like 64. So now if we go back over 65, I'm going to kill this one. Whoop. All right. Not for a second, but if it goes back over with any kind of a conviction. Because now we're below a nice solid support line that we don't expect to go back over. If we're having this weak sell-off that we expect to have, we're going to continue to have it. And now we're up $200. Now 60, and of course every 10 cents is going to have a little bit of hope, some ability to hold, you would think. So if you eat, and you know, that's what you got to track. How easily is it going past these 10-cent levels? Now I really want to get out if we go over 65, because it's at this point it should be breaking down. So if it's not breaking down, then something's wrong about my premise, and it's not. So I'm going to get out, and now see about if we have a good entry to get back in. But look at that. Now we're up to $10,000 exactly. So now I'm happy. All right, I like round numbers. Round numbers make me happy. John says, when CO contracts are rolled, does it show up in the volume numbers? It does. It goes from one to the other. So you'll see the June contracts increase. I don't know if it shows up immediately, but net you'll see them net out. In fact, that's one of the things we were talking about. Even from last week, there's actually more open contracts in the front 4 months now than there were in the front 4 months when we started looking. So it's getting worse. That's why, by the way, I said I don't want to be long on oil. It's actually getting worse. There's now more pressure in June than there was in May for oil to sell down. Oh, volume. No, well, the volume, there's no contracts left. to trade, right? All they're doing in May is dumping what's left. The June is just a churn. That's just a daily, ridiculous, insane churn of contracts. These contracts, as you see, there's 252,000 turnover. That's in 20 days of trading, that's like 5 billion contracts are going to be traded in June. That's their average number. So they're going to trade something like 5. So those contracts in June will be traded 5 billion times, and all that's ever going to get delivered is maybe 5 million actual, 5,000 actual contracts. They'll trade 5 billion contracts, representing 500 million barrels. Wait a second. Thousands. I got to get this right. You're going to have 250,000. Damn it. I cannot do math while I'm doing a seminar for some reason. I think it just takes too much of my brain. I'm really good at math, too. 250 times 20 days. 5 million. 5 million contracts. It's 5 billion barrels of oil. That's what it is. But they're going to trade 5 billion barrels of oil, and of those 5 billion barrels that get traded, maybe 10 million will actually get delivered. Not trillion. No, it's not trillion. I knew that. You see, you got to, I knew it sounded wrong when I was saying it. I'm like, can't be trillion. There's no possible way. It can't be that many contracts. So it's 5 million contracts representing 5 billion barrels of oil that get traded. And the reality of that, first of all, 5 billion barrels of oil is insane. It just shows you how completely fake the market is. There's no 5 billion barrels of oil. There just aren't that many barrels of oil around anywhere. But they trade them because it's a fake market. So all they're doing is these guys are paid to pretend to trade all day long. That's their job, is to fake a market. And the reason they fake a market is for the benefit of the people who sell the oil, because in a given month, you have 90 million barrels of oil being sold 30 times. It's 2.7 actual billion barrels of oil are sold in a month. But don't forget, the NYMEX is only representing West Texas Intermediate crude, which is 1/10 of the world's oil. West Texas crude, it's not even a 10th, actually. I can't show. U.S. oil is a 10th of the world's oil. West Texas crude is maybe 5% or something like that of the world's oil. And that's what they're trading. They're not even trading the entire oil market, yet they're trading 2 times more oil than there is in the world in any given month. It's an insane, ridiculous thing that has to be stopped, and that's what I was talking about in my article this morning, because I was saying this all started when you had the Commodities Futures Modernization Act of 2000, which was really a complete retracement of all trading bans, and all regulation of commodities and futures trading was just taken away, and that just let these markets go completely wild, and famously allowed the Enron loophole that let Enron begin energy trading in California. That was, it was manipulation. There was nothing Enron was doing other than manipulating the markets. That was what they were doing. All right, so as you can see, the pressure is still mounting. I got out of it because it bounced and I didn't like the bounce. But as you can see here, this is steadily going down. Now we can watch 50. 55.50 is now a good spot to watch. And here we go. We can take a re-entry here. Whoop. Move it up. Nope. Here we go. All right, so I'll get back in one. I'm just trying to do this for demonstration purposes, really. So as I said, 65 is the line, so we know we can get out at 65. As long as he's under 55.50, though, I'm going to be comfortable. That's why I didn't mind getting in, because I have a line that will tell me where to stop. So if he gets back over 55.50, my premise is gone. My premise is that these guys are going to keep selling off into the close for another 20 minutes. And if they're going to keep selling off into the close, they're going to drag this one down. All right, so we have the old contracts are at 55.50 on the button. We're hugging 55.60 on the new contracts, and I think we're going to get another leg down. So we'll see what happens. All right, and we're watching the dollar. Yeah, here's the dollar. The dollar's steady at 98.07. So now another part of my premise is going to be I want to watch the dollar And I want to see that it stays above the 98 line, because if the dollar gets weaker, that's going to boost oil. If the dollar starts going up, that's good for me, and that's going to help oil go down. So that's all it takes to construct these trades. I mean, you just have to have a premise, and you have to have enough, what would you call it? You have to have enough marks that you can make on several different commodities or several different items that you're tracking that are, you know, your story has to have some touch points that you can go by. So in this case, the story, the premise that we have is that oil is going to sell off into the close. Who's going to sell off? These guys are going to sell off. And if they're going to sell off into the close, I expect these guys to follow. And I know that the dollar has a high effect on oil, so I'm going to watch the dollar also to confirm that there's no reason oil is going to suddenly turn back up on me. But that being equal, I expect these guys to continue down. Now watch, the next big test here is at 55.20, where it should be a bouncy line, right? And I'm right at 56.50 here. So I'm going to be very careful. But once I get below 56.50, that's going to be my next stop, and I take another $100 off the table. All right, see, now we're below 56.50, so I want to keep that as a stop. And I'm not going to do a hard stop, but I'm going to keep my finger there because that's when I want to remember where I want to be. Oh my God, look at that drop. All right, so much for 56.50. Wow, so much for 56.40. So much, oh my God, I can't believe I got rid of my 20 contracts. So pissed. So he failed 55.20 now, so now I want to see if he goes above 55.20, I'd stop out. It's getting really violent now, so you know we'll see what happens. 55.21, so let's take that one off the table. All right, and there's another $300. See, it's not hard. If I wasn't talking to you guys, this is what I'd be doing all day long. All right, Mike says, it's interesting, apart from one time where SPX sold off in the close, barely above 2100, we haven't had two or more back-to-back closes above 2100 so far, strong resistance, which means the institutions are probably selling to retail. Yeah, that's definitely what's happening. While the MSN lures me with the articles like Time Magazine's advice to go all in. Yeah, absolutely. And oops, there it goes even further. All right, and believe me, if I hadn't already made $10,000, I'd be, I'd be writing these things down. But it's like I'm just doing some for bonus money now, and I'm also trying to teach you guys good discipline for getting out. That's something a lot of you guys lack. You don't take $100 off the table when you make it in 10 seconds. All right, you got to learn how to do that, because you see what I was doing. I guarantee that you guys were watching me going, oh, he took it too early. Oh, he took it too early. Oh, he took it too early. But meanwhile, while I'm taking it too early, I just added $400 to my total, taking it too early. Because it's bouncy. I know it's going to be bouncy. There it goes right now. Look at this. It's always bouncy. And if it doesn't bounce, so what? We'll get them next time. All right, so now let's see. We're over 20, so bad premise. I don't like it over 20. I don't have any reason to go short 35, but I would short 50 if it came up there. But I wouldn't short 50 if this guy's popping back up, but I don't think he is. So now I'm watching 21. If he goes back below 20, that's going to be weak. But otherwise, we'll expect a bit of a bounce. How much of a bounce? We fell from 58 to 56.20. All right, so that's $1.80. And that means the bounce would be 36 cents, which would be 56 would be a bounce. So basically 50 would be a weak bounce right now. And if it can't make 50, then it's in big trouble. He lost 20, so that means he's going down again. So we can probably try another short. Oops, too soon. But he lost 20, so I'm okay. I don't mind. And I'm ready to buy another one, actually. Now he's back over 20, but he's not looking very strong to me. Oh, actually, I'll show you. I wasn't going to show you a ladder. Oh, there he goes back down. Now I would stop out if he went back over 20 again, but now he's coming back down. See? Is my screen messed up for everyone or just Chrissy? Chrissy's got that weird Canadian electricity, so I think that might be a problem for her. Sorry, Chrissy. All right. Well, I still would like to try that new seminar thing that we were looking at. Greg, we keep testing them and eliminating them, but we're going to try a different one. 12. All right, so now I'm in good shape. Although I started at 30, so I'm not that excited about this position. Oh, come on. I want to have some more fun. All right, not working. Oh, that was good. Oh, now it's working. Holy cow. You got to be kidding me. Another $100 bucks, we should take it. Let's take it. Ooh, it didn't fill it. There it goes. All right, thank you very much. And that's how you make another $100 bucks. I mean, this is, there's practice involved, and you can do this in the paper trading account on Thinkorswim, and you can learn how to do it. It's really just a matter of picking your spots and learning how to watch these charts. But all I'm really doing, it's not complicated. I'm watching this guy lose a level. I know that these guys pair trade, so if he loses his level, he's going to lose his level. Now he's losing his faster, but I know why that's happening, because this guy's being manipulated down while they're being held up to close the gap. Notice the gap is now 80 cents, because the goal is to close the gap so those guys can roll their last 19,000 contracts at the open, or whatever that number was. Wait, I'm sorry, what was that last count? I think you said 19,000 or something like that. Yeah. Oh, I'm sorry, John. You said volume is 19.2. Well, if the volume is 19.2, we started with 35,000. That's the volume, though. That's not how many open contracts remain, is it? So the volume is now 21.9. And of course, obviously, as long as they have to keep volume up, if they have to keep the volume up, and they've got to trade out at least another 10 million contracts between now and the next 20 minutes. And if there are no buyers and they have to sell in volume, then what's going to happen? Then the price is going to drop. This is not hard. So that's going to have mounting pressure. Is going to keep going down and keep pushing these guys down. So now we're back to 30 again, 35. I think I said 35. I'd be happy to do it some more. So I want to do 30. It's kind of greedy, isn't it? 31. 32 I'll take. All right, let's put a bid in for, ooh, that filled too fast. You know when it fills really fast, that means it should make you nervous sometimes, because that means somebody really wanted to sell it to you. Okay, so if something fills really fast, it means you may have made a mistake, so you have to be very careful about that. But again, our premise is that they can't get back over 55.20. Time is ticking like a bomb. I knew I could have waited for 35. Okay. But I'm not, just because I could have waited for 35 doesn't mean I'm going to go in. I want to average 35, which means my next entry from 32 would be 38. So if I get 32, I would buy that, I would sell that, sorry, so then I would average 35. As long as he's below 20, but he's not below 20. See, not below 20. Up, almost 38. Oh, way over. They both popped over on me. 25. Wow. 27. Uh-oh. I think I might have lost that one. 23. All right, one more shot. Oops. There we go. All right, now I have an average of 56.35. So what am I going to do? I'm immediately, because I wanted to average 35, I want to buy at 35. So I'm going to put my buy in over there. And even if we get a spike down, it'll fill. Now I'm going to start watching this one very carefully, because my premise is that he's going to continue to fail over here, and that was just a small bounce. But now I've got 2, so now I'm going to lose a lot of money if I don't get on top of this thing. Here's 39. So what I really want to see this fail 25. And again, this is not normal trading. This is because I think they have a deadline at 235 that all these contracts have to be dumped. And I think somebody's going to still make a major move that's going to take them down another $1. And if that happens, I would like to have a couple of contracts on it, or at least one contract on it, so I don't feel like a total idiot for dumping my other 20. Oh, did you hear that? Now I'm back to 1. Now I'm exactly where I want to be. Now my average is because I sold that one. My average is now 56.39, and I'm up $60 at 35 because I got rid of that extra contract. That's how you ladder into a position. So if I only double down to reduce my basis, as soon as I get my basis reduced, I dump that contract. And you see, it got a quick spike down. It ate my contract, and now I'm back to the one contract that I wanted to be on. I mean, I really want to be on 10, but it's too late for that. IB says 17.50. Well, it's not actually. It's 17.35. I mean, unless there's something I don't know. They're still moving, so 17. It's 2:15 now. Oh, 17.15. Oh, I see. You're saying that the futures contract is going to trade. Yes, that's not the NYMEX close. That's when the futures contract will trade. So yeah, that contract may last longer than the NYMEX close. All right. Meanwhile, I'm not thrilled because it's not going down as fast as I wanted to, and I did make another $80, so I kind of should take it off the table, right? Yeah, let's do that because it's been too bouncy. All right, there we go. So, it just keeps adding to the cash pile. If it's not if it's not moving the way I want it to, I take $10 or take $20 and run. It adds up, right? I mean, look, we're just talking, and I'm doing this, and it's making and $400 or $500 up already. All right, actually it was $9.9, yeah, so about $500 up. All right. Mike says, not a big deal. Banks like BNSCM may be on the hook for being on the other side of all those 90 oil hedges to Canadian producers. Yeah, that's going to happen too. You're right, because at a certain point, and that's one of the reasons that the contracts are being driven up now, because at the end of the quarter, all right, so at the end of or whatever the hedging period is, but at the end of the hedging period, they've got to come up with cash. So it's better for them. So if you've got to come up with billions of dollars in cash, it's actually cheaper to spend money to jack up the prices on the NYMEX so that you don't have to pay as much in the contract for the hedges. And Chrissy says, why am I looking at the 15-minute? Well, that's just the one that was up there, frankly. I mean, I usually do look at the 5 minutes when I'm trading. So I had just been looking at the bigger picture. But I actually plus the 15-minute, which makes it more like a 5-minute. See, that's what a 15-minute looks like. But they are 15-minute candles. You're right, and I should be looking at 5s to be doing these trades. So let's go ahead and do 5 and minus that back out. See, it's really the same chart though in the end. And we can do 5 over here. Chrissy, by default, I look at longer-term charts. I'm not a big I'm not a big day trader. It's fun, but it's like, yeah, it's just not interesting to me. I prefer to make the big money on the long-term stuff, not the small money on short-term trading. How do I put CL on the K month on TOS? You just type it out. Just write CLK5. And if you want to figure out what the contracts are, you go here and you just type CL on the all products list, and it's going to give you the chain. See how it says K5 is off the chain now, but see how CLM5, CLN5, CLQ5? So you can see which contracts are which by looking at that, and you can see how many days. Well, this is not true. I don't trust Thinkorswim anymore because they for whatever reason take off the CLK5 early. They take off all their contracts early. I think they just don't want people trading them past a certain date, but those are not the actual dates the contracts expire. I think someone said they're the dates the futures on the contracts expire, but I honestly don't know because I don't play the futures on the contracts. I play the contracts. Some people actually trade futures on what are essentially futures. So you're playing the futures on the futures. I don't like that much. All right, so drifting around, and exactly what we thought was going to happen is happening. I missed my chance while we were chatting about that to get back in, but that's okay. We can just watch it. And so now we see 56.20 is failing, and now we're probably going to get a ride all the way down to here, 55.42, which is still, frankly, I mean, still it's good money. I mean, it's still another 50 cents at least. I mean, it's actually 70 cents down from here, so it'd be $700 if we hit it. If 55 fails, all hell's going to break loose here. So let's watch that. That's going to be interesting. Whoop. Oh, there you go. Thank you. All right. 55.10. I don't know that 55 is going to fail. I'm just saying if it does fail, things can get very ugly for those people who are still stuck in contracts. Oh, 24. Should I take it? What do you think, guys? I don't know. 27. Oh, too soon. Too soon. Oh, and it filled. Damn it. I did not mean to click on that. Oh, by the way, here's a very, very important point about futures trading. Oh, I got burned for talking. I was going to say, if you accidentally take a contract, then sell it right away. Just get out of it. I freaking was going to say that, and all of a sudden it popped on me, so I'm screwed. All right. Now, do I want to get out, or do I think this is a head fake? That's the question. So here we can do a bit of a close-up. Let's say we'll call 50 a loss. I don't want to, but we will. 35 is where I wanted to get an entry, so let's take that. 36, 38. You're kidding me. Really? All right, I'll take it. Oh, and it doesn't fill me. Can you believe this? Oh, there it goes. All right, so now I'm averaging 39. Oh, no, I'm averaging 34. So back to my selling one at 34 if I can. But he popped back up. See, 30? So I'm not comfortable with this. It's not good. And it's down 150 bucks now. And we have 15 minutes left of the NYMEX. So this is just based on a fundamental premise, not based on the chart. I'm expecting a sell-off into the close for those last people who dumped their contracts. No, it wasn't 10 grand while we were doing those webcasts. I made the 10 grand earlier when we were shorting off the 57.50. Ah, there we go. All right. So now it's spiked down, and because I put my sell in, I got the fill that I wanted, and now my average is up to 56.42. So I don't have any worries unless we get back over 56.40, and now I'm going to watch him to say, let's say he holds 25, and if not, oh, nope, bad trade. It's just not working. Oh, man, what a tease, huh? See, he's dropping to 38, 28. I should probably get out. There. So I lost confidence. If I lost confidence, I shouldn't trade it, right? End of story. No reason to lose money if things aren't doing what you thought they would do. I thought there would be more selling pressure. I'm not seeing it. Therefore, I stopped trading. I'm not getting the move I expect, so I get out of the trade. Don't lose money. It's Warren Buffett's rule number one of investing. Don't lose money. You know, so if you had a good run, and we had a good run, that was a very nice little run of 500 bucks added onto the thing. There's no reason to risk it again trying to make more. That's plenty of money, and as Mike says, 10,000 is definitely plenty of money to make in a day. So there's no reason to push our luck or do anything weird. All right, so for me, it's like it's fun, but it's not. I'm not going to do it now. I'd like to see the line here. I'd say is definitely 20. So if they break 20. It's still interesting, but, you know, we just got to watch it until the close, and we have now 10 minutes to go. And I thought we'd get a big spike down, but we're not getting it, so I'm not sure why. All right, I don't know how many contracts they're holding on to. If they hold on to too many contracts, what's going to happen is they're going to be delivered to Cushing, and in the month of May, you're going to see the inventory reports reflect a lot more barrels coming in, because that's what these are. These are orders for delivery to Cushing, Oklahoma during the month of May. So I'd be surprised if they actually leave them in. Volume 25.1. No, they were 35. So 10 million is a lot, though. I'm surprised they're going to take delivery of 10 million. But you're right. There's only 10 million left. It's possible they can take delivery of 10 million barrels. Still, though, that's probably going to be a little bit of a build ahead of us on inventory. So it'll be interesting to see what the net effect is. But you're right. Once you get down to 10 million barrels, it's not like you can expect a huge sell-off. So apparently, now notice while we were talking, these things don't have timing on them, but it wasn't very long. While we were talking, they went from 19 or 18, I think it started, 18.8 when John first said it, and that couldn't have been more than like 20 minutes ago. So it went from like 18.8 to 25. They dumped 7 million barrels of oil while we were talking. And that's the net effect. That's what dumping 7 million barrels of oil looks like. So apparently they did. They hit their limit at 25.1, 25.4, whatever it is. They've gotten enough barrels out where they've retaken control of this market. And that's it. So now this trade's over. End of story. Would I go long here? No, I would not go long here because I don't have a long premise. I don't see this, Christy. John is looking at something on, what is it, E-Trade, or is it a, he's got the volume numbers, apparently they're current. Thinkorswim does not offer us that information. Interactive brokers, oh yeah, okay. So yeah, that's actually nice. I would love to have that. I don't know anything on Thinkorswim that does that, but I didn't have it on E-Trade. So that's actually a really good feature to be able to actually see the volume moving live. That's gives you a lot of information. Now, I was just going to say, here we're at 56.50, which is worth a stab, since we still have just 10 minutes to close. But already it popped down. I'm not going to play games. I'm not looking to scale in or anything like that. But 56.50 was a fun place to go short because it's 50 line. All the 50 lines are good places to go short. So let's see if we can pick it up. Nope, it's not going to happen. Meanwhile, what's happening in the indexes? That's what I want to know. Take a look at the other charts. Still weakness, weakness, weakness. And the NASDAQ is leading up because, let's see what Apple's at. Well, 127, Apple's not doing anything. So it must be other NASDAQ. Oh, look at Tesla, though. Big $10, big move. Today up to 210 again. Ooh, CMG is almost $700. That's an interesting one. What's going on with NKD? Where's NKD? It should be right. Where did I put it? There it is. So Nikkei's up here. It's not breaking over 21. It's not breaking over 20,100, but it's holding 20,000. So I wouldn't bet against it. Okay, so at the moment it's looking still very, very strong. Why is it that way so much? Because the dollar is stronger, the yen is weaker. The main reason the Nikkei is up is because the Bank of Japan just replaced a hawkish member with a guy from Toyota. And Toyota totally benefited from all the stimulus. Toyota, more than any other company in Japan, got massive amounts of financing money. That's how come they're able to give you 0% financing here, because the Bank of Japan gives them 0% financing. And that allows them to sell cars all over the world in record numbers. So they love 0% financing. And this guy from Toyota is an advocate, is a dovish advocate of zero interest. So that's a very dovish addition to their Fed, basically, to the Japanese Fed. And so they're thrilled. So that just means more free money, just like everything else seems to, right? All right, so moving off the chart, I got bored with oil now, so I'm not really feeling it. All right, yep, and they're over 50, so who cares? Let's just move along into that trade. Back to the news that I wanted to talk about. Forgot. All right, don't have much longer, so we have to wrap this up. Was this the news that I was talking about? 11:52? No, it was the later news. I think. Oh, no, this is the one. So I made a couple of comments in here. Yikes, what a lot of news. All right. Inflow into tips, I think that's interesting. I wrote water inflation because that's if people are buying a lot of tips, record, not a lot, the highest weekly amount since the fund's opening in 2003. Tips are bonds to insure against, I don't know what, I forgot what it stands for. It's to insure against inflation. Anyway, they're inflation bonds that cover you, so they move up when the CPI moves up. So if people are buying tips, then they think inflation is coming through on the CPI. There's a Forex settlement from the big banks in May. They're going to settle Forex. I can't believe they're only going to fine them $1 billion each. I'm disgusted by that. They paid $4.3 billion to Switzerland, and that's just 4 of the 5. Paid $4.3 billion to Switzerland. So this is bullshit. All right, because we're bigger than Switzerland. We should be getting a lot more than $1 billion for these guys screwing around with the Forex reserves. Greece is Greece. Europe debt is insane. That's a big thing that's in the news lately. There were tradable things. That's what I'm looking for. Travelers' margins are squeezing, and the reason their operating income is going down. This is a negative effect of zero rates. You can't put your money anywhere that gets a good rate of return. If you're an insurance company, you're not allowed to just screw around with the markets. So that's a problem for them. Iran is going to put, another reason not to be bullish. I'm sorry, I forgot about this one. Iran is going to put 1 million barrels a day on the market starting in June, maybe sooner. All right, if we settle this deal with Iran, that's why the Republicans are so much against it, because their oil buddies are freaking out that Iran is going to start putting oil on the market. And you'll never get oil prices higher if they start putting it on. In fact, here, Lisa Murkowski of Alaska, where they have a lot of oil companies, wants to put through legislation to lift the ban on oil exports, calling them sanctions against our stuff. That's very clever. It's a good talking point. But here's the thing. If we as a country use 18 million barrels of oil a day, and we as a country produce 9 million barrels a day, why on earth would we have to export oil when we're using all the oil we have? That makes no sense, does it? The only reason you would want to export oil from a country that uses more oil than it produces is to create artificial shortages in that country and drive prices higher. How is this good for anyone other than her oil company constituents? Here's the BP takeover I was talking about. Here's Baker Hughes laying off 10,500 more people. They'll make Halliburton the bad guy. But BHI is moving forward with its deal to be bought by Halliburton. We have a big play on that. Arch Coal, big trouble, bad losses. Rio Tinto says they will keep shipping iron ore even though they get no money for it. I really don't understand their strategy exactly. DuPont, another company is using buybacks to engineer their financials. Lockheed Martin, we like Lockheed Martin. UTEC also weak. Harley Davidson weak. International Toolworks is weak. That's bad when International Toolworks is weak. It's a companies in all kinds of parts of the economy. Under Armour, a bit weak. McDonald's is trying to sell breakfast all day, but I don't think they understand that if they sell breakfast all day, then a guy who comes in and has breakfast might not be buying the Big Mac he usually buys. I don't know. Not sure they really understand that part of their business. Brinker, who cares? Shake Shack. Bird flu. I talked about the Tyson trade today. Very, very good trade, and they went on sale today because of this bird flu nonsense. I mean, it happens, okay? They have bird influenza. It's a thing. So the birds are sick, and these people with supply has to deal with it. But Tyson Foods isn't, they've watched their stuff. They know what they're doing. In fact, Hormel's a competitor. They're issuing a warning. So these guys step up their inspections like 100% when something like that happens. Cantor likes lumber liquidators. Teva's buying Mylan. Damn, that's the one I wanted to talk about. Okay, so here's an arbitrage play we can make. Teva is buying Mylan. I don't see any particular reason that wouldn't go through. It's 50-50 cash and stock. Mylan hasn't accepted yet, so they haven't fully realized the value of the trade. And the way you would look at that, it's kind of like the BHI trade we have. I knew there was one I wanted to talk about. It's great. So MYL, if theoretically they're going to get bought for $80, the way we play for that, but bird flu trade was Tyson. We like TSN today. So essentially you say Mylan started off in the 50s. Now they're at 70, so they already went up 50%. So T was playing a bit too much, I think. But meanwhile, there's no reason you can't do something like sell. These prices are bad. Okay, if you sold like the $60 puts, okay, for $2.90, all right, for $3 over here, it says $2.96. That's 2017, and you buy the. Let's see what we can get away with. The 65s are $14, $14.50 here. So the 65s and let's say the 75 are $9. There you go. So that's 9. Okay, so that's 1448 minus 9. So say 1450 and 9 is 550. So it's 550 for the 65-75 spread. And you're going to sell these guys for $3, the $60 puts for $3. That's going to net you in for $250 on the $10 spread. And then if the deal confirms above $75, what's going to happen is that when it closes, either these premiums are going to squash and you'll get a good price and you can get out right away, or the trade or the deal, when it finally goes through, you'll get paid off and you'll get $10 back for your $250. So that's a good way to arbitrage a play like that. All right, that's the kind of things you want to take advantage of. That's why we read the news all the time, to see if anything's happening that's exciting that other people are not seeing. Now, it's a shame because we could have caught that earlier, but that's just where we are. Jim says, no LL position. What do you think of the 30-50 bull call spread selling half the June 20 puts? And would you do it today or wait for a pullback? I would do it today. I think that it's going to get away from you the other way. So I like it. I think it's fine. I think 30-50, 30-45. I don't know if I'd be so greedy. Look, on those positions, I'd rather make more money. So they're at 33, and you're talking about 2017 30s. See, if you're going to spend $11 on the 30s, I would still sell the 35s for closer to, for 550 or 6. If you sell the 50s, you're getting $2 less. I'd rather have the $2. I really would. I'd rather have the $2 and maybe make $5 later. It just makes me feel happier. And you know what? If it does go down, then you can use that $2 to roll yourself to a lower position, and then you'll have your $20 spread, but it'll be like a 25-45 spread instead of a 30-50 spread. That's how I would look at it. By the way, as to selling a 20 put, I know that's a very attractive price for the 20 put, but then why not sell, since you're selling half, why not sell half of the 25s? And you'll get $5 each instead of whatever you said, instead of a $3.30. So you'll get quite a lot more money, and you're only doing a half sale. I mean, unless you really hate them. But if you really hate them, you shouldn't be making this play. You got to look at it that way. If you don't like them enough to sell a reasonable put, then you really probably don't. Then what's going to happen is if they do go down, you're going to probably freak out and get out of it. And that's the exact opposite of what you need to do if you want to stay in this play. Because they could have more bad news. They could have a bad study. They could be fined. They could be sued. They are being sued, of course. They could be sued by consumers, and a judge can order them to pay some kind of reparations on something. Whatever it is, it's going to be a one-time thing, but that's not going to stop the stock from spiking down if it happens. So unless you really want to own them, I wouldn't even mess around with this thing. All right, I got to wrap this up now. Oh, let's see how oil finished up. How pissed am I going to be if it? No, I didn't want to see that. Trader. Oh, big bounce. Okay, so good. I feel much better about getting away from that. So look at this. It's 55.58. So they did keep the gap around $1. I'm sure the contract rolling is done now, and that's the end of it. So that trade's over. And now, unfortunately, look, the first 2 weeks of the next cycle, we usually don't play it. We don't get interested until we get to those last 2 weeks when the trading gets a little bit more predictable, because we can watch the contracts and see what kind of pressure it's under. So India will be a big beneficiary of Iranian oil. Yeah, but oil is what they call fungible. In other words, if India gets it from Iran, then somebody who was giving it to India gives it to someone else. Unless India's use is going up by 1 million barrels, there's 1 million more barrels on the market somewhere. It's not like one particular person gets it. India may benefit from the pipeline, as you say, and having a good shipment route and so on and so forth. But honestly, it's not a big deal. More oil is more oil. Oops, sorry about that. Got it. Movie mode. There we go. Just a headline, Canadian crude shipments from the U.S. are hitting the global markets. That's interesting. Well, I guess that makes sense, though, because the U.S. sure as hell doesn't need any oil. We've got way, way too much oil in this country at this point. What was bird flu? We talked about that one. And that was a 70-80 bull call spread selling the thing. Oh, that was from Mylan. Yeah. Yeah. No. Wait, 80. No, that doesn't sound right. Stop. Are you talking about Mylan? No, because they're getting bought for 80. I wouldn't want to be that low. What were we looking at? 65, 75? Yeah, that's right. 65, 13.90, 75's $8. So that's what, 5.90. So like, you know, $6 roughly. That's a 65, 75. Because you want to be comfortably inside the range, because the deal could get renegotiated. It's half cash, half stock. So if the TIVA people don't like it, it'll cause a sell-off in TIVA. This is what happened to Baker Hughes, because their deal is part cash, part stock. And that means that when Halliburton stock went down, the value of the deal for BHI went down, because they're getting the stock as a large part of the deal. So with a half cash, half stock deal, you have to be concerned that that people won't like it on TIVA's side and will start selling TIVA off. That will reduce the amount of cash. Then it gets renegotiated anyway, but that's what you got to watch out for. So anyway, I like to give it a comfortable bit of headroom. So the offer is 85. I'm happy being at 75, a bit below the offer. And of course, the 60 puts a mile below the offer, so I'm not upset about that. All right, and Jim says, thanks, Phil, and I'm not sure what that was for, but you're welcome, Jim. 1730 put. You guys, you got to realize I'm reading this stuff on the chat. All right, not sure what that was, but hopefully we got it right. Oh, you meant the 30 put. I get it, for the lumber liquidators, I guess. That made more sense. Christy's asking 25-45 bull call spread. That sounds kind of wide. Weren't we talking about the 30-45 bull call spread, I think? Type in the Mylan trade. I went too fast. Okay, we're cutting the thing now, so it's not going to make a difference. But it's going to be the Mylan trade is the 60-75 bull call spread. 60 calls. You buy the 60 calls. I'm sorry, 65. Bleh. The 65 calls right here. 13.90 was the last sale on those. You sell the 75 calls, and they are $8. Okay, you could do the 80s too. The 80s are not much less. They're $5.75. But I would just be happy with 65-75 because that's $13.90 and 8 is $6. And then if you sell these calls, if you sell these puts, the $60 puts for $3.50, then your net is $2.50, and it's a $10 spread. You're gonna make $7.50 on $2.50. I mean, what's not to like about that? Dennis, it wasn't you. It's the fact that it's the fact that literally right before this webinar, I closed out those 10 contracts because I wanted to show you guys from scratch how I could build a position into the close to make the money. And unfortunately, it dropped 50 cents at 1 o'clock, right when I was starting the webinar. So right after I closed, they dumped it. I was so pissed. Anyway, no biggie. So let me all the time be pissed that I made $10,000, right? USO 20 puts went from 37 to 74. Oh, very nice. Okay, cool. Yep. So we have those. You know, that's right. You talked about those too. So that worked out. KMB is trading. That's a good one, and it was 65.75. Okay, great. We are all caught up now. Now let me just quickly take a look at the news, see if there's anything else besides that. But I think that was the big important one. It talks about TIVA. INVIO, very interesting. They have a study on hepatitis B that seems to be going well. INO, that is. Rambus had kick-ass numbers. It was very surprising. Here's what happens when you follow Carl Icahn. Carl Icahn announced that he'd taken a position here. It popped up to $2, and people thought that was crazy. Now it's $14. So this is a small stock, but so what? I mean, it's a mobile ad service provider. I think it's insane. I'd love to short it, but I'm too scary with Carl Icahn driving the stock. IBM, keep in mind with IBM, they had the 12th consecutive quarter of declining revenues. And not only declining, but they missed their revenue their targets. So that was not good. SAP topped estimates. So this is the thing you're going to see with a lot of European companies, a lot of Japanese companies too. They're beating earnings, but they're beating earnings because their earnings are in a terribly weak currency. Nobody took down the expectations of the currency fast enough to do the earnings. You know, when Toyota, that's important. I'm going to do this. Okay, so star XJY. Okay. So when Toyota reports that they earned whatever, 1 trillion yen more than last year, or whatever the numbers are in crazy Japan. But when Toyota says they earned an extra 1 trillion yen, here's the problem. The yen was 99 to $1 last year. Now it's 85 to $1. That's down 14%, 15%. So Toyota's earnings have to go up 15% just to stay even with the deflation in the yen. So these European companies and Asian companies that are reporting earnings in their currency, and people are acting like they had gains, but they didn't have gains. You have to make sure the earnings you're reading about are reported in dollars, otherwise they don't count. Okay, or they don't count to you as an investor. Don't get enticed by these things you hear, because a lot of these, it's very irresponsible, but these stupid journalists, they report everything in whatever they see. They don't do any research, they don't check. So if the earnings are reported in yen, they'll write down the yen number, and then they'll convert the yen to dollars, but that doesn't help. Last year's yen isn't the same as this year's yen. So in other words, you know, if I'm a Reuters reporter and I'm lazy, which they all are, frankly, and not you, Reuters in particular, but all these reporters are lazy, what they're going to do is they're going to take last year's 10 million yen and divide it by whatever it is yen to the dollar. I don't know the numbers. Whatever the current yen to the dollar number is. Let's see. It is 120. All right. So they're going to take last year's number and divide it by 120, and then they're going to take this year's number and divide it by 120, and they're going to report this is a change in yen. That's not right. Because last year, you have to divide by 100, or not even 100, to divide by 95, and this year you divide by 120. That's a big difference. All right, so in other words, 120,000 divided by 120 is 1,000, right? So this year they earned 1,000, but last year they earned 120,000 too. And you divide that by 100, and that's 12, and that's 120, and that's 12,000. No, I'm sorry, whatever it is, 1,200. So they earn. So even though so when they drop, the actual revenues are dropping 20% in dollar terms, but you're getting misreported at you. And it's so much so that this is happening that I can't even point it out because it's constant. I dig into these revenues all the time, and they're wrong. And everyone's got it wrong. And what's killing me though is that the market acts like they're right. It's crazy. So, again, this is why I call for getting into cash. It's too crazy. It's too stupid. There's too much dumb stuff going on. You got to be able to just sit back and watch it and see what the reactions are and let it happen. Because this is really crazy. And it really is driving me nuts when they start reporting these foreign earnings in the wrong currency. It's just going, that's when you're way off the rails. 12 quarters declining revenue for IBM. Do you still think it's good to invest in? Yes, I still like IBM long term. I would like to see them sell off. Did they sell off today or they went up? What did they do? IBM. Oh, good. They sold off. Okay, I'd like to see them down around the mid-150s and get in there. I'm not so thrilled at 165. And I don't think they're going anywhere. I don't think they're flying or anything like that. But I like them at this price generally, like the 150, 160 level. But not enough to pull the trigger at 165, even though we could obviously construct something that would give us a lower price. And Malai says, what do you think 12? Oh, thing guy. What do you think 12 quarters might be due to the shift in earnings revenue mix? No, I think they're rejiggering the company, and I think that's fine. I think they're heading. Look, this Watson thing is going to be gigantic. The artificial intelligence is going to be beyond huge, and They're at the forefront of it. They're doing that. They've got a lot of cutting edge stuff in computer chips and memory. The next generations of computer chips and the next generations of memory chips are things that they're working on. They're working on quantum computing, all sorts of things that are just, very futuristic. So long term, I would want to be an IBM. Short term, though, it's too much R&D, and the market doesn't like companies that do R&D, so there's not a big profit picture there. Apple's another one I'm looking for. Yeah, I like the Apple play. I'm always going to like an Apple play. There's nothing bad. There's nothing bad about Apple. So if you can buy a $5 spread that says all they got to do is 130 by the end of the year, absolutely, I think that's a good spread. I prefer, though, at the moment, we're kind of waiting for a sell-off to get back in. I'd like to hear some bad watch news. If there's nothing but good watch news, then we'll just buy them. But, we're kind of waiting until earnings and see what they say. If we're lucky, they'll drop 10% for some stupid reason, and we can buy them again. All right, and that is it. So thanks very much, everybody, for coming. I appreciate it, and we will do this again next week. All right, have a nice day, everyone.